Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. Great to see you all. As always, we'll be tackling your questions as we prepare for the morning. Take a look at what this market has for us today. It's tough not to at least start with a look at, let's see here, the economic calendar. There it is. All right, it's tough not to start with a look at the economic calendar today because we have, scrolling down to the 27th, we've got those, we've got preliminary GDP, so one of the macroeconomic pillars. We've got unemployment claims. Remember that the Federal Reserve of the central banks, G7 banks, they're the only ones with a dual mandate where they're not only tracking inflation, but they're also, they have a jobs mandate. And so, that's going to be a little bit of a market, at least attention grabber. I believe these are the lowest unemployment claims we've seen. I'll have to double check, but I think this is one of the lower unemployment. Yeah, take a look. So I'm going to go back to, there we go. There's 2020. So these are the lowest numbers we've seen. I thought they were since the pandemic. So pretty big deal. Now, what's a little interesting is how is the market going to respond to this? Is this good news, bad for the current prospects of investors and traders expecting the Federal Reserve to stay on their current extremely accommodative monetary policy track? So we'll see if this is indeed, whether this is good news or whether this is good news, it's bad news or not. All right, so with that being said, let's go ahead and jump into the charts. Welcome. All right, so let's kick this off with, let's see, thoughts on the economic numbers this morning. Glenn, that's pretty much it. Yep, that's pretty much it. Is KRE a good bet? So we're talking about then KRE, regional banks tied more to small caps. And as far as KRE, I mean, structurally, it's not an uptrend. So I would say only consider KRE if you already have exposure to XLF. That's number one. Okay. Consider KRE then if you are interested in the Russell, but you want better underlying market characteristics, better structure. This is not great structure. This is not great bullish structure. What structure? The way in which the 8, 13, 21, and 34 exponential moving averages are traveling higher. So better than IWM. IWM is in chop, not as good as XLF. So that's the answer. It's really a process of, do you have exposure in the better corner and the larger corner of financials? And if you do, and you're really looking at the Russell, go with the KRE. Russell's still very, very choppy. And that means, by the way, within the context of chop, you're looking at the upper and lower levels, the overbought and oversold zones of distribution choppy markets. All right, next question is, did I expect the dollar to be so strong recently? Well, I don't think it's so strong. So I guess it depends on the time frame you're looking at. This is the 6E. This is the inverse relationship of the dollar. The trend on the 6E is double green. So, I mean, if you want to look at one session where the dollar strengthened in the euro weekend or the dollar strengthened against certain currencies, and remember, please don't look at the dollar basket. If I could eliminate a certain market or symbol from the markets, it would be DXY and DX. Why? Because it's the absolute wrong way to get an understanding of currencies. Currencies have to be viewed one versus the other because the dollar's relationship against the basket is diluted by the fact that it's 58% euro and then a whole bunch of other stuff. So first of all, how are you looking at the dollar? Please don't look at the DXY or DX futures for that understanding. And two, I actually don't think the dollar's been weak, frankly, at all. So again, it depends on the time frame you're looking at. So thanks for the question, but again, what is strength to one person may not be at all to the other. And we've been long, by the way, the euro via FXE now for a couple weeks. So my bias is already going to be a U.S. dollar short play. So intermittent dollar strength is usually going to be an opportunity to short it. And it has been. That has been for months. Most focused on the Canadian dollar and the British pound. All right, next up. Hey there, Jimmy. C, City, kind of going back to that earlier conversation about XLF. I love C, sure, as a piece of the XLF. Now, if we're thinking about, is C the best relative outperformer within the XLF? Well, that becomes a different conversation. So, you've got to go then through the different heavily weighted stocks within the XLF ETF and then start to determine, all right, where is that relative outperformance? Or, and this often is what happens with what we do over in the sector secrets, if we like so many of the names in an ETF and, well, we want to get better bang for our buck, we'll go with the tide, the sector ETF versus the individual stock. And I think when it comes to XLF, this is the way that I've been playing it. So all my cards on the table. We've had exposure to recently Bank of America, but that's it. For the most part, I've been going just sort of in with the XLF. So thanks for the question. MARA. So if we're looking for any kind of support, look for a pattern. There's never a magical day that is the support. There's a day that could begin the process. And for me, the process is always going to be, not always, but almost always going to start with a minor low. A minor low is an interesting little pattern. This is not technobabble. This is just a good old-fashioned pattern where a lower low is surrounded by two lower highs. So it's a 3-candle pattern. Doesn't matter if it's a 1-minute time frame or a weekly time frame. A minor low is a lower low surrounded by 2 higher lows. And by the way, that pattern is part and parcel of the Darvis boxes. Now, Nicholas Darvis, and I'm a huge fan of Nicholas Darvis. I've read many of his books. He's got many books beyond the $2 million most popular one. He doesn't really talk about the pattern. And yet, if you are automating Darvis, which we have here at Simpler, if you've automated the process and we've modernized it, so that I've always sort of endearingly called our Darvis 2.0, to sort of pay homage to the guy who started it, but sort of acknowledge also that we've modernized the process. And actually, in the modernization, we realize there's certain patterns and candle counts that occur within that box. I reduced the box just to the 2 horizontal lines rather than putting the sides in the box, which sometimes really inconveniently hide the wicks of the candles that they're slicing through. Having said that, start with a minor low. I'm always looking for minor lows. They are the breadcrumbs of a lot, they're the breadcrumbs, the path, Hansel and Gretel. They're the breadcrumbs on a chart that a lot of folks overlook. And they're oftentimes, in my opinion, really the foundation, even the linchpin, if you will, of other patterns. So now I'm going to look for a bottoming pattern. I've got the minor low. We've actually got minor high potentially forming. And so what I'm going to do is focus on the minor low and see if I can form a pattern. And if I can, then perhaps. But really, simply the proximity to the 200 exponential for some people will be enough. But the truth of the matter is, John, if you're looking for MARA or even RIOT to bottom, to get in that precursor of a move back to the upside, look no further than Bitcoin. That's really, to say this is really the captain of its own ship is, it's hilarious. It's going to go where Bitcoin allows it to go. All right. So next up is, let's see what we have here. Bear with me. Let me get down this list. BBY. Mark Sure. What do we have here? So you guys know, if you've been part of the Charts and Coffee crew for some time. The priority that I will nearly always have, and this might be a great stock for someone else. It just won't be for me. So it doesn't mean it's untradeable. It just means it's not one of the pitches that I'm going to want to swing my bat at. And I don't know if you guys can see the bat sitting on the shelf back there. It's there to remind me. It used to sit front and center on my desk just to really be ridiculously 2.5 foot long reminder of, what it is I want to do as a trader, which is really be a great batter, right? This is not one of my pitches. So keep in mind that we have proximity to earnings. That immediately, that very tight proximity reduces the likelihood that I will do anything with it. But I think the precursor to that, my friend, is it wasn't in a double green. And in an environment where we have so many great trends, I just will not prioritize sideways markets. I'm sure they're perfectly tradable to somebody else. Yeah, I'll tell you what I do with sideways markets, though. If the premium is there and the consistency of the distribution market trend is there, and I've never really dove into this, but I'll collect income. There is an environment for speculation, ideally trending markets. There's an environment for day trading. There's an environment for the credit side of option trading. And they are different environments. You are looking for different psychological behavior. And sideways markets for me become more, hey, how can I collect credit on this thing? How can I use spreads, condors to just rely on the stability, the reliability, that maybe the predictability of being stuck in a distribution range and take advantage of collecting credit. So it's not that you can't do something. It's just that it's not going to be my sort of initial go-to. All right. McDonald's. Do I like McDonald's? We're going into ex-dividend date, so I don't not like it. But again, in terms of structure, I'm actually looking for this one. McDonald's, Alcoa, and GE, which we looked at just yesterday. The sideways movement I'm looking at as a precursor to a breakout. So for me, the McDonald's narrative is really one of a potential breakout narrative. Do I have any thoughts on Tesla? I am very pleased to say Tesla, unless I'm asked about it, crosses my mind 0 per day. But you ask an interesting question in terms of intraday, right? An hour. Now it might be a little bit more interesting. It's got a great bullish structure intraday. So if you're inclined to want to trade this stock, then yeah, I agree with you. The structure we see here, very nice on the intraday, sure. But quite straight up, Tesla crosses my mind 0 per day. There are so many other better places to focus on the predictability and the continuation and the probability of follow through. And this just ain't it. Now, having said that, Tesla did, remember I said, a lot of times the precursor to some kind of move is going to be a minor low. Well, minor low back in here, minor low back in here. This one is a Darvis. For those traders that were looking at Tesla, that 555 area is about as good as this has looked for a buy since we developed this Darvis back in March. So since March, this has just been a dumpster fire. It's been a place where people are expecting it to behave like 2020. It's not going to. Think about why 2020 was so good for Tesla. It wasn't because of Cathie Wood and ARK. She was able to surf the trend, the psychological behavior of the split and being added to the S&P 500, neither of which are going to happen again. Impossible to be re-added, to the S&P 500. And I don't believe a split is anywhere near any kind of reality. So keep that in mind. Why was it up? Because they started making money selling cars? Please. Right? So keep in mind why this market had attention. If you have a longer term view on it, as I do, by the way, before anyone thinks, oh, you're a Tesla hater. No, I just hate that people are still trading this stupid stock in 2021, right? However, that being said, before I tick everybody off who's a Tesla fan, this looked terrific around the 200 EMA and that Darvis level, minor low. That's a great level. And if that level is going to be the precursor to a reversal, let it be that. But please, please, please focus on the double greens in this market. There are plenty, okay? Question about natty gas. So all my cards on the table, we're long natty already. And we do have natty gas inventory numbers coming up. And that just means we have to sort of be, well, we have to brace ourselves for the Thursday reality every Thursday of this inventory number. We factor in some hourly price movement volatility. So we will calibrate, around 11 a.m. to an hourly upper end price movement range. But since we're trading this on the daily, and I love that the question about Tesla was a 60-minute, because if you don't have clarity on the end of day and you're not down near an overbought or oversold threshold, intraday is a fantastic way to take advantage of, a stock that maybe you love the price action of, right? But you don't want to rely on the continuity of what you will get in an uptrend versus what you won't typically get in a distribution chop. So, but anyways, when it comes to natty, unless you're day trading it, this is just going to be probably an 11 o'clock volatility moment, and then we'll just continue on with the trend that we're taking advantage of, but via UNG. All right. Do I like wheat here? I don't mind wheat, Kevin. Wheat is actually performing better than corn right now. The crop progress report rocked, I think, a lot of markets. I don't know if it's performing better or not, but I'd say wheat and corn look a lot alike. What we do like, if let's say we love grain, so I love where you're casting the net for sure. Now, where is the structure better? It's better in beans, and it's better in bean oil. So you're talking about ZS and ZL in terms of the quality of the trend that wasn't rocked by the crop progress report that came out late Monday afternoon. Do I like, so ZS? Absolutely. I like that one to the long side, better than probably any of the other grains. Silver, I don't have any skin in the game in silver. So it's probably, I love at least letting you guys know when I do and don't have any skin in the game. I typically don't like trading silver. When it comes to metals, palladium and copper have been mostly where my attention has been. I think for most traders throughout 2021, they've been rewarded for keeping an eye on copper far more than any other metal. Probably coming in second place is palladium. However, if gold is going to start moving higher, and I think this is a fresh uptrend in gold. It took gold February to March, March to April, April to May, and now going into the end of May to create a trend break and reversal. These things don't happen quickly. Trend breaks and reversals do take time because not only are you shifting price, but price is reflecting psychology, and minds have to be changed and positions have to be altered. And, stop and reverse isn't exactly how reversals happen. So we have an uptrend now. We're above the 200 period exponential moving average. And these are very recent month of May occurrences. Now, why do I talk about gold if we're talking about silver? Because silver is basically going to either tag along with copper or gold. And if both copper and gold are heading higher, then silver's got a chance. But I do not have any skin in the game in silver, and I probably won't play SI. If I do play silver, it'll be SLV. All right. What are my thoughts on TLT? Well, that's a ZB and ZN, those the 10 and 30-year bond question. As long as they continue to move sideways, the aforementioned gold will have a good chance on continuing the uptrend that it recently formed. But for the most part, I don't love this. The 1, 2, 3 already broke, opening the door for gold. It looked like it was going to open the door for bonds, but I do not like the bond play here. I like what bonds. So if you were following my analysis, and a lot of it was free, right? So, I just want to mention this. The gold trade for me, and the one that I was in, and again, I think timestamp is a thing. Go back into the Simpler Trading YouTube channel and go to beginning of April and end of April analysis. I was pretty much discussing, like a skipping record, a 1, 2, 3 reversal and the breakout. So we've been long gold via GLD, micro gold, MGC, or GC since that break and the break of the wave. What we needed, and I was probably a little bit later than I wanted to be because I really wanted to see the 1, 2, 3 and ZB trigger first. Now, the irony is I got stopped out of my ZB. I think we had one winner and one loser. We went 1 for 1 at bats with the 30-year bond. But by the 30-year bond breaking out, it stopped the downtrend and allowed real yields to flatten out. And that kicked the door open for what we're seeing in gold. So we've been long gold for some time. It's been a nice ride. It's getting a lot of attention now, as is usually the case after a market's made a significant move. But please don't feel like you've missed the move. I think the move in gold is a longer term uptrend as long as real yields, don't confuse that with the yield curve, real yields stay flat to weak. All right. And then, silver will likely track with that. So my interest in TLT is really more as a barometer to long positions that we have in gold. I'm really not that interested in TLT. We might have some momentum breaks here and there, but I think the play in gold has been and will continue to be a better play. Now, my opinion on that might change if gold pulls back as bonds head lower and maybe around the 154 level on the ZB. TLT at the bottom of that range might look good again. That's what I'm focusing on with TLT. All right. So thanks as always for being part of Chart and Coffee every morning. I really appreciate the questions. And we've got a great group here. I'm going to head on over to the futures room now, kick off the morning. Be good to each other. I'll see you tomorrow.